I mean, yeah, I don't know. Okay, we're officially recording. Hello, everyone. I've got Kim Azarbi back with me today. We're gonna have a conversation. We're gonna record it, and if there's any alpha in here, we're gonna share it with you. So, Kim Azarbi, thank you for being here. Do you want to say hi?
I do want to say hi. Hello, everybody. It's been a month. Seems like it's longer, but I think we're progressing along this cycle very, very well. We're keeping on pace with things. I do want to tell people to please go check out Creative Precious Metals channel. The stuff that Camel is saying on those Whiskey Wednesday things, or the whiskey and rum conversations. Oh, there is so much good stuff in there. I can't get enough of it.
Thank you,
Definitely check
brother.
that out right off the rip.
We're
The,
actually doing
the,
another one on Saturday.
yeah,
Yeah,
I think it's about time. It's like every 3 weeks it comes up.
yeah, every two or three, I think. So it'll be released on Sunday.
Yeah, look forward to it. That's gonna be awesome.
Yeah,
Cobra Stacker is Cobra Stacker gonna be there? Because it's you and him that basically have the conversation of the CBDCs and what's coming in the future.
yeah. Cobra's gonna be there as well. Yeah, I'm looking forward to it.
Nice.
We usually, yeah, we try to put the world right.
That's it's awesome to just have like three or four of you UK dudes get together and uh, and talk about what you guys are seeing that side of the pond. You know?
Yeah, we have a lot of fun. Yeah, like I said, I'm really looking forward to the next one. So, Kemazabi, I don't know where to start. I'm not sure if you do either.
Oh, there's so much to say.
Yep.
Okay, so we were talking about Bitcoin trading in the future and how it's going. So like, uh, have you seen my posts on Twitter responding to Fiddle Swanee?
No, I don't think so.
Because I think he's had who was that? Gary Cardone. He's a big Bitcoiner now. Had a Twitter Spaces yesterday, and they were talking about the financialization of Bitcoin and how BlackRock is coming into the space. And Fiddle Swanee, I respect him. Look out for his content. He's got great content. Very very insightful guy. Um, Big Bitcoiner, and he feels that it's detrimental to Bitcoin to have BlackRock involved in Bitcoin, which I kind of agree that it's not destroying Bitcoin, but it's definitely impeding Bitcoin to have such financialization. I mean, the same thing happened with gold back 20 years ago, got financialized, and then just basically it had a nice run up, but then it's just been range bound on the back row, and it can be suppressed via certain financial instruments. They can short it and go long and just make a trade in a range. And this could hold Bitcoin back. And he says that this is basically a missed opportunity for what Bitcoin can be. And I fully agree. I think people's greed is going to get in the way just because number go up. Like, oh, I want my bags to pump. And that greed is kind of shadowing over Bitcoin's true potential of having a new monetary system. And I'm probably going to write something about this. I haven't got all my thoughts together, but I basically see it the same way that they're trying to destroy it. And if Bitcoin is the honey badger we expect it to be, it might just be basically a final boss before true adoption. But it could delay things quite a bit. Um, but yeah, the way this may be trading in the future, as you were kind of saying, is it'll trade more like a commodity and go less risk on and more of a risk off play.
Yeah.
And this past week, I've been thinking about how countries have their own basically financial hub, if you will. The United States has its central bank and its financialization. UK has its own. Uh, Asia has its own. And these are all very localized companies that trade on the stock markets of those localizations. Whereas if things get very discombobulated in the world, if things are starting to fall apart locally, say the West, and money is flowing to the East, during that transition, we may want to look to hold worldly assets, like assets that are common worldwide. And that would fit in with the commodities. We're talking gold, silver, oil, food, agriculture, and potentially Bitcoin could jump into that and be more of a risk-off environment. It could accelerate the adoption of it because it is a worldwide asset. So it has potential there to really accelerate the adoption. And the BlackRock thing may be trying to slow that down or profit from it. So
Yep.
BlackRock is profiting from it, they're going to take profit somewhere. Or, like you were saying in your video today, they may just use their paper contracts to short the hell out of it and just push the price down, suppressing it. They know how to do it. We know they know how to do it based on the metals.
Yep. And
the price of gold being held where it is, the price of silver being held where it is, with inflation the way it is. Come on, it doesn't make sense.
Sure. And did you see the thing with BlackRock can borrow from Coinbase? They can borrow Bitcoin from Coinbase and settle it off chain. Did you see this?
Yeah, it's not even reported. So
yeah,
what does that mean though? Like, I didn't look into what that actually means. I think there is a cause for concern. What's your take on that?
My take on that is, in theory, they can borrow a bunch of Bitcoin, sell it, right? And then at some point, as long as they pay it back, then they don't have to record it they don't have to record it on chain. It means that we wouldn't be able to view it. People wouldn't be able to pick it up because there are a bunch of people out there that like to monitor the on-chain activity. Obviously, they wouldn't have any visibility of that. And the optimist in me says it's probably not the end of the world, but it certainly has the power to be abused, right? If they can just borrow, essentially, Coinbase users Bitcoin, and the ETF holders
get your Bitcoin off the big exchanges.
Yeah, exactly. And not only that, but all of the people that are buying, because Coinbase is one of the primary custodians for the ETFs, right? For most of the spot ETFs. So if you're holding your ETF shares in your share account, then in theory, I don't see why BlackRock can't take that Bitcoin that is allocated to you in your ETF and sell it on the open market and then settle it all off chain, and no one would even have traceability. No one would even see that a big sell wall was appearing or that Bitcoin was being dumped. So it does seem like they could potentially be using this as a suppression method. And I mean, are you really surprised? Like you said, with the metals, we've kind of seen this before. The whole thing makes me wonder if they really are trying to find a way to get hold of more supply before they really let this thing go. That kind of makes sense to me because we're still at something preposterous, like 70% of the supply is held by long-term holders, right? And my thought is they're probably going to want that number to go down and the number that they have to go up before they're truly ready to let this thing reprice higher, assuming they're even willing to let it reprice higher, assuming they can, maybe there's a different conversation to say maybe no one can stop this thing. And I suppose if nobody gives up the supply, then good luck to them.
Similar to the GameStop roaring kitty nonsense we've been hearing about.
Yeah.
If nobody sells, then it gets marked up and they just have to keep buying higher to cover their shorts.
Yeah. So, I mean, Bitcoiners have a chance to make a stand here, right? But the volatility could very well be quite wild. Yeah, the whole thing with borrowing Coinbase's Bitcoin and settling it off chain is pretty nefarious. I think it has nefarious implications. Whether or not it turns out to be nefarious, I'm not sure. But I have long, as you said, I was making a video about this today, and I've long suspected that the way they would want to do it is to create some kind of blow-off top, then drag this thing out for an extended period of time to convince everyone it's going to zero and it's dead. And that would be one way to free up a bunch of that 70% that is currently in long-term holders.
Okay. So do you know the cost basis for MicroStrategy's Bitcoin?
No, I don't know.
You know what it's at now? I'm going to take an estimation. Horizontal line. I think 32 was the last I heard. So they might be around the 32, 35.
Yeah, it's probably in that neighborhood.
So we got a little support there. We've got support there if price decides to come back down that far. So yeah, the blow-off idea could get MicroStrategy to be adding their leverage. They're borrowing shares or selling shares to. Well, they're selling shares to borrow money to buy more Bitcoin.
Yeah,
that's the way it ends up working. So if this does ramp up, then their cost basis, could potentially be upwards of the previous all-time high.
Yep.
And how would they feel if this does blow off up to 180, 200, 250, 300,000? We'll get into that a little bit later, but then price comes down and puts them underwater 50%. MicroStrategy shareholders would not be too content with that, and they may be exiting. They may be like, we got to get out of this. This is bad. And that's where BlackRock grabs their supply. Because I see them as a target. They're very public. Like, we're publicly buying 100,000 Bitcoin, and we're doing great. This is the new investment vehicle. Nothing can go wrong.
Yeah. Yeah.
And that's when it goes wrong. I mean, even with a smaller account, you're buying $100 worth of Bitcoin, and you're like, oh, we're good, nothing could go wrong.
Hmm.
And then it comes back down and puts you at $50, and it's like,
Yep.
good,
Yep.
take a profit. We've all been there, and MicroStrategy may have a lesson to learn there.
And he's painted
Just
himself
because,
into he's painted himself into a corner, right? Because he's been very public in saying, "I'm never selling. You never sell your Bitcoin," and so
Mhm.
it's a catch-22, right? If he doesn't sell, he might have to, like you say, tolerate a big drawdown, upset with the shareholders. They're going to puke their positions, and if he does sell, that's going to really damage his overall position anyway because he's stood there and his reputation because he's stood there the entire time and said, "You never sell." So I wouldn't like to be him in this situation.
yeah, so if say the path is to the upside, and then you come back down, and then a holding period until the next cycle low. You know, April, what are we talking? Next cycle low is sometime around the end of maybe November 2026
Yeah, maybe
is
somewhere
the
between
next clearest
September.
low. Imagine a chart pattern that looks like that. That's just painful for, a year and a half of just, bleh.
Yep.
And the miners can't mine anything lower than that. So there's a risk there for the network. It gets pretty sticky until that cycle low comes in and how high it comes in.
Yep.
I want to bring people's attention to this power law that I've been looking at, which has given the bottoms of Bitcoin based upon the power law, which is, I guess, just a multiple of price appreciation over time. The time being log scaled along with the price being log scaled. And it gives the lower boundary. Let's just mark off where the next cycle low would be with a vertical line. Cycle low being 2026, say October. Trend line to see where it's off the end. So the power law says it's not going to dip much below 57 ish, 50 grams, something like that. Maybe it goes down to 40, 30,
Yep.
according to the power law.
Yep.
We'll see if that model holds up or if it's going to be like the stock to flow that kind of deviated quite a bit. Not invalid in my opinion, but it deviated more than people would have wanted it to.
Yeah. But did you ever notice that nobody complained when it deviated to the upside, right? It was only the one time it deviated to the downside instead that everyone started declaring this thing dead.
Definitely. Uh,
Do you know the
Granby is
numbers for
still
the
on
stock
it,
to
but he's
flow?
getting a lot of heat. Oh, they're up to 250,000 to 500,000 or something like that.
Yeah,
The anticipated peak.
it's a 500,000 average for the next part of the cycle. So it implies we have to exceed 500,000 significantly, and then fall back to have an average for the next cycle of 500k, which seems ambitious to me personally.
Yeah, I would agree there, but that would give a nice 90% decline if we go, back to the 40, 50,000.
Yeah, true.
Definitely is ambitious. Let's get some targets, some targeting ideas. Let me turn off this power law. Yeah, that's just, I don't know if that power law is going to work out. It seems good from what I've noticed. I mean, Bitcoin is a true power law. And these can be seen in society. The expansion of cities,
Yep.
countries can be seen doing the power law. Maybe there's something to it. I mean, Bitcoin could be that phenomenal that it's just going to be part of society. Trend-based fib extension, where are we going to extend to on this run? Now we had this leg that moved up. If this leg is kind of repeating there, let's just take a 1-to-1 fib extension of that to say somewhere in that pocket of the 1-to-1 to the 1272. Upper end would be 500,000.
Okay.
If we even get there.
I don't know.
Well, that's in my anticipated box of where I would anticipate it going. More conservative target, I'd come on the line chart and measure close to close. Bring the box down.
Yeah, this is my thinking in this neighborhood.
Yeah.
Yeah. Even maybe
So
slightly lower as the low end.
Which I'm opposed to. All right, we'll just keep with this this line chart, and we'll do some playing around here on things that I've noticed. So Elliott wave, 5-wave structure. I'm not seeing very many 5 waves in this thing, but I do see 3-wave, and these tend to complete. A, B, C. Looks good. A, B, C. And those measure very well as well. So your theory of the 3 pushes, which markets move in 3s,
Yep.
would suggest the next push, I would anticipate it being either equal to the first wave up, or the relationship between 1 and 3 gets expanded. So we measure that. Come on. Sorry. Just want to do that. Something's going. That's discombobulating. Trend-based extension.
That looks better. That looks way better.
Measure wave 1. And we actually tagged the 1618.
Mm-hmm.
So if we have the same relation between wave 3 and 5, we can measure wave 3 from the low wave 3 to the high. If our cycle low is in and we're good to go, 1.618 gets us 320,000.
I'll take it.
And that does make sense. You have the same relationship between wave 1 and 3 that you would between 3 and 5. You know, you have an extended 5th wave, which does work. I mean, that's Elliott wave. We got to talk about Elliott wave as well.
Yeah, we do. Yeah, for sure.
Another thing I wanted to just calm down expectations as well. And there is some merit to the cycle low being in, but we're just going to have it bounce here, and we're just repeating these 2 patterns. So you have the reaccumulation into a distribution. This was your markup phase, and we might just pop up, match wave 1 to wave 5. So to project a target for that, I would measure wave 1 and project from a potential wave 4, either complete or about to complete for the next few weeks. And that would give a range between 113 to 133.
Yep.
And that works. I mean, you got wave 1, 2, 3, 4, 5. That scenario requires us to go sideways into the end of June, something like that, to match these legs, in my opinion. You come and break the highs, grab that liquidity, come all the way back down, and look like you're about to break down, and then one more final wave into either the end of the year or let's look at that. Is that going to end up being the end of the year? Take that all off there. Trend-based fib time. If we were to measure from the start to end of this correction, project from the end of the markup phase, roughly. Yeah, that might bring it to the end of the year. Yeah. Wow.
I see a lot of
that would be interesting.
I see a lot of the Elliott wave guys calling for this 4 not to be done yet, and exactly what you're showing, for us to have that final push into the end of the year, and for this to be part of a 5-wave up move. It doesn't fit necessarily with the cycle idea, but the cycle idea doesn't necessarily say it can't happen either.
Yeah.
For me, it largely depends on when we set that third angle.
Yeah. I mean, it's got to, on a weekly scale, I think it's got to close a higher high.
Yeah.
And then after that, it closes a higher high by the higher low. If it doesn't get all the way back down to the low and retraces like, a shallow fib retrace, like a 382 retrace, then it's game on. This thing is going to explode. But if it comes all the way back down to the low, then you're basically doing the same pattern as the accumulation. I'd be looking at, if it does take all the way to the end of the year, only makes 130,000. That's all you get. I'm sorry.
Yeah. On a
The
balance of
optimism would say that we had. How can I explain this? 1, 2, 3. Let's get a basic Elliot wave thing here. With a 1, 2, this is your wave 3. This should be 4. That's the way I'm counting it. I'm matching that leg with that leg, saying 2021 is a expanded flat end right here. So then this would be the wave 5. How high does wave 5 go? It's questionable, but this could, extend way off into here, where the current wave, if we only make 130,000 by December, would say that's your wave 1. This is going to be a wave 2 into the next cycle low, and then it really gets going. And it would be long and drawn out, like your video was talking about today.
Yep. It'll be tough to get through. Do you have a balance of probabilities for which of these you think is most likely?
Not yet. I would say not yet. The balance of probabilities, I guess it makes a difference if we complete that wave the same way.
Yeah, if we got another 45 days plus of sideways.
Yeah. Yeah. So this is already matching very nicely. The first A wave down is matching very nicely. Wave. You might find it funny that I'm doing this all from my phone, but that's the only way I've ever done it. So the probability increases that 130,000 would be the top area for me if we continue sideways.
Okay.
Into, say, July. Well, probably the beginning of July, I'd have to guess. Then I would say the top comes much sooner. But similar to the S&P 500, it is giving a structure that kind of looks like that could be what's at play here.
Yep.
But if we come zooming out of here, kind of the way that you were depicting it for a blow off top, it's just going to go right from here and just go to the 1618. So I guess cross your fingers as to that happening for now.
Yeah.
But if we come all the way back down, then they're distributing in this range.
Yeah.
And that makes sense with how an ETF would likely trade with the newer players that are coming in that are like hedge funds and stuff like that. They're not looking to shoot the moon. They're looking for alpha. They're looking for making gains. So if you have let's put the candles on there. Since the ETF launch, roughly here to up in this range, they're up 70%. And a hedge fund that's not used to getting those types of returns is like, oh my gosh, I better rebalance.
Yeah.
So that they'd be rebalancing. That's all. And it's pretty common to rebalance anyway, because if you look at how Bitcoin is traded, I mean, from the lows, 15.5, you went up 80, 90%. You basically doubled. It went up to 30, 31, I think it was right here. Went up 100%. Then the next leg up from this low, 25K or so, you went up to 50. I mean, that's a doubling. Just keeps doubling, then halving, then doubling, then halving,
Yeah.
So I think it was Socrates that put out a post today, which I'm a follower of Socrates. I love his analysis. He's analyzed the market similar to the way I do. He said as soon as Bitcoin broke previous all-time highs in the past 3 cycles, it doubled in price. So if we take 57 and we just go up 100%, you're putting us at 110,000 or so.
Yep.
But that may be just the first leg of an ABC, and you get something that looks like this to this to this. Super extended 5th wave. But yeah, I am looking for it to be pushing in 3 waves, similar to the way it's been doing it all cycle long. The whole cycle has been 3 waves up, pause, 3 waves up, pause. So you have the 3 angles. Is this common with cycles? Now, I'm fairly new to cycles. I started studying them slightly before getting to know your channel and your cycle methods. Which, oh guys, by the way, if you have not gotten Camel's PDF on cycles, you're missing out. That is just so worth it.
Thank you, bro.
You can involve it with your other analysis. If you do Elliott wave theory, if you trade Ishimoku cloud or anything, involve the cycles. A very simple method. The way that Camel's put this out, you can incorporate it very easily and have a higher probability trade setup in daily time frame, or even as low as a 4-hour time frame.
Yeah,
Works out pretty well. But
you
yeah,
can go down to 2 hours and 1 hours as well. I don't personally, but you can do if that's your thing.
yeah. So the 3 angles of attack, is this common with most cycles? You get the three pushes per cycle.
There's nothing in cycle theory that says we have to have 3 angles of attack. The 3 angles of attack is something I personally have found works very well in Bitcoin and, well, anything that has a blow off top. But because Bitcoin tends to have these big parabolic advances, I prefer it. I see a lot of people using a curve, a parabola. I just don't like those personally because I find them to be. What I see is people fit a curve or a parabola, and then if the price trades below it, they just kind of stretch it out a bit. And I find these 3 angles are uncheatable. So once I've set that first angle, any price action below that, I consider a violation. For the second angle, now that that is set and well established over a period of multiple weeks, then any price action below that, I consider a violation and a breakdown. And I won't now adjust that trend line, right? Once I'm committed to that trend line is uncheatable. And yeah, if we're about to set a third angle, which typically for Bitcoin we do, right? The time we spent between the start of the first angle and the second major touch, right? Now we've spent an almost equal amount of time climbing the next angle. And once we've set that third angle, once we've seen multiple weeks of touches and price respecting that level, then it's just something I find that when they break down, best to get out of the way of it.
Yeah, they go quick. Let's see if we can get. Now, this is not necessarily that degree, but I'm doing trend angles here. We'll see if this has any relationship. I'd be curious if that is that roughly twice. Yeah, that's
Almost,
twice as steep.
Yep.
This is log scale, by the way. I don't know if you do that, but if we are to rip right out of here, we'd expect this angle to be 27.49. This one should be what, almost 100 or 90. I mean, yeah,
Something like that, maybe even steeper.
what gives you the idea that it's going to be that crazy of a blow off top?
Well, it just experience from trading these things, right? I mean, if you for the sake of illustration, if you go back a cycle to the 2021 bull run, you'll be able to do this here. If you can set this first angle from like the body of the low, or perhaps, or even the bear market low from 2018, and include the, you could set something like this. Yeah, you could do that if you want, and then we can set a second one from there that goes up just after that Bart Simpson pattern, all the way out. Yeah, something like that. And then you can set another one that goes up even steeper. Yeah. And so
There's your exit.
And if you go back to 2017, you'll be able to do the same thing. This is just how it's just from my experience. Anytime, because I got started in penny stocks, and they tend, when they get marked up, they tend to finish in a blow off top. And I noticed this 3 angles was really, really good at capturing. You can get out pretty close to the top if it gives you the third angle. Now, if it doesn't, they can be tricky to deal with. But even there, that's only 2, right? There's only 2, and it would have got you out a reasonable number. But if you go up to about there, yep, and then no, the next one along. I mean, you could use that, or I would probably use the next one along when it starts to go really vertical. Yeah, something in this neighborhood. Yeah, that's how I like it. And then even steeper, right? You don't even have to include that wick.
Yeah. But that gets into like hyperwave theory from Tyler Jenks.
Yep, it's similar, yeah.
You followed his work before, but
no,
he doesn't do that on the log chart.
No, I actually prefer it on the regular as well. I'd never heard of him until you mentioned it the last time we spoke about a month ago. But yeah, incredibly similar.
Yeah, he got out at the top. He was actually calling for, I think, this trend line to be, is it that trend line? I remember him calling for like 1,500 on it. Because this was his trend. No, this was his trend line way back here.
Mm-hmm.
Why? Yeah, it was something like that. So he had a gap in there, and he didn't like it. But he did get long at the lows. He was in somewhere around here. He's like, I still want lower, but I see the potential of this thing bouncing, and he got in. And
Yep.
then I think he died around sometime around November 2019 area, something like that. But yeah, great guy. Look up his stuff on YouTube, Hyperwave Theory.
Yep.
Um, So are we expecting the same thing for like S&P 500?
Yeah.
Like,
Actually, I would love for you to pull an S&P 500 chart and to repeat this process. And what's really interesting to me about this is, like I said earlier, there's nothing in cycle theory that says we have to have three angles. They're two kind of standalone things. But what's really interesting about on the S&P specifically is when you connect the first angle, it perfectly touches the weekly cycle lows. And then when you connect the second angle, it perfectly connects the two weekly cycle lows. And now we're looking for that third and final angle, which kind of implies we should have a left translation in this current weekly cycle, which also is another thing that is, as far as I can tell, an observation that suggests the top might be coming sooner than most people are willing to expect or willing to even entertain at the moment.
yeah, let me clear this chart after just showing it very briefly.
Yeah, sure.
Like I was saying on Bitcoin, it's kind of got the same structure for now, having this box be here, your accumulation.
Yep.
This potentially, the legs still match for a distribution here. So your top might be the 5,700 sometime around the timing. I mean, these are weeks, 42 bars that led into that A wave, basically at the wave 3, and then projecting from the low. So that correction in the middle is kind of the center of the cycle. Timing probably still works out pretty well. The chart pattern is what I'm unsure of yet. If this does come back down to the lows again, then I would see that as the distribution, and you would get one more leg up into August or something like that. So, but it's a potential.
Up
Nothing
into
is,
August. Did you say
guaranteed.
August?
August, yeah. August is
Okay.
the latest I would expect.
You're gonna like this. Okay, you're gonna like this. So, first of all, I mean, grab your three trend lines, and you'll see what I mean. Right out the gate.
Trend lines. We're starting from the low.
Yep.
Connecting there.
Yep, that's one.
So one. I like doing this. This is learning from the master of the trend lines.
That's two.
Cool.
And then the question is, are we setting three yet, or is three to come after this daily cycle? That's the question. If three is going to come at all, of course, three doesn't have to come. But I will say this: typically, when I see two, I see three. I don't often see just two and no three.
Yeah, that makes sense.
And what's really interesting is the major lows here are weekly cycle lows that fit beautifully. And the low on the far left, the wick, where you've got the first trend line.
Let me pull up my. The way that I'm usually doing cycles is with the cyclic lines. Do you actually count the bars?
Yeah, I count them manually. Yeah, but you can do it this way as well. There's one in the middle. There's a weekly cycle low in the middle. Yeah, we're getting there. Somewhere in this neighborhood. Okay, yeah, you can see now.
Oh, okay, now I see it. Okay.
Okay, so here's where it gets really interesting for me personally, right? As per the cycle theory, if we've got 4 cycles chained together, they typically make up the next time frame up of the cycle, right? So if we've got 4 daily cycles, one after the other, then by chaining together those 4 cycles, and it can be 3 and it can be 5, right? And it can vary between asset classes. But typically speaking, if we're talking a textbook perfect example, then 4 daily cycles chained together gives us a weekly cycle, and 4 weekly cycles chained together give us the larger yearly or multi-year cycles, right? So as it stands, where you've got marked in these vertical lines, we've got a weekly cycle low at the far left around October 10th, okay? Then we've got a right translated weekly cycle into a slightly early weekly cycle low. Your line shows April 17th, but it's slightly before that, this one. Then we perfectly balanced out the next weekly cycle by, instead of having 2 short ones next to each other, we then had a slightly longer one and a daily cycle inversion, which is where we get the second touch of the first angle. And then from there, we had another heavily right translated weekly cycle, this time perfect, right? The one we've just bounced out of is perfect.
Yeah, so what I just did there was mark the middle of the cycle. So now we see this one is left translated, very
right translated. Yeah. Yeah, but you'll notice all three of these are right translated, right? So the first one is right translated.
Okay.
And then the second one, that's it, right translated there. And then the second one, right translated. The
Nice.
third one is right translated. Now, here's where it gets super interesting, because when we chain together 4 cycles in a bullish uptrend, they typically go right, 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 and then left translated. That's typically how you get it. And if that's going to play out as a textbook example, okay, then it tells us that this last weekly cycle should be left translated, which gives us a top before August. Again, at the same time that apparently this thing is thinking about setting that third angle, right?
Look at that. The middle of the cycle will be around the 5th of August or 5th or 15th of August, something like that.
You couldn't make it up,
Wow.
right? You couldn't make it up.
Wow.
Yeah.
That's crazy.
Yep. Yep. Now, there's nothing to say it has to left translate. Of course, it's a market. I don't have to tell you this, Kemazabi, of course. But yeah, if it's a textbook and a picture perfect example, that's what we would expect. A top before that midpoint, and then the remainder of this weekly cycle down into the next weekly cycle low. And what's interesting is if all of this occurs with a third angle, a blow off top, then it will look just like your typical blow off top. Okay, it will have, in terms of the timing based cycles, the perfect structure. In fact, it will probably be printed by me somewhere and added to a future textbook should I ever release one. Because they don't get any better than this. This is as textbook as you could possibly get if it is to play out. Yeah, if we get that third angle, if we get the top come in before the midpoint of the cycle and the rest of the decline into the next weekly cycle low. I mean, I couldn't describe a more picture perfect version.
That is crazy. That is just crazy. You're blowing my mind right now.
Fantastic, right?
Let me go on and look at 2-day chart. We're gonna call it here. We're gonna call the date at the top. Let's get a trend-based fib time. We're going to go to the very low. And we'll put it right here. I think this is still low. Let's try to get precise here. To that peak. That low. Oh, this one's actually projecting it goes further than that. It's gonna be a mid-translated.
I'll take it. I don't mind.
August 8th. Mark it on your calendars, everybody. August 8th is the top. It's all just fun, though. But I mean, we enjoy looking at charts and stuff, so it's always fun to have some fun with it.
Yep.
Especially if you actually end up being correct and your patterns play out, and it's like you kind of surprise yourself sometimes. Be like, well, I guess I was correct on that. And those are some of the best trades that you'll ever have. It's like, that surprised me.
Yeah, this one actually went according to plan.
So after a cycle peak, a left translated cycle, then what do you expect? Like, how do you know that it's complete? You have a trend line breakdown.
Yeah, but then I would expect us to end up at the bottom trend line in the best case scenario, assuming the thing isn't going to zero. Often in the case of a penny stock. So let's take it one step at a time. The first thing I would expect if this is going to play out is for us to climb that trend line, right, and then break down. So once we've broken down, I would then expect us to find at least some short-term support on the second angle, perhaps even grind up it for a little while, and then I would expect that trend line to break down as well. And from there, it becomes somewhat of a guessing game. The target would at least be, if I was short, the target would be the first angle. And I would be using the weekly cycle lows to guide me, right? I would be looking for, as we find the weekly cycle lows and the daily cycle lows from within there, if it really is a true breakdown and we really are going to head lower, then we would obviously expect to see the daily cycle low form, a left translated cycle that rolls over, fails, undercuts the cycle low, and thus trends lower into the next daily cycle. I'd expect to see that chained together to give us a downtrend until eventually we find a weekly cycle low. Out of that, we'd expect some level of bounce, some level of reaction. And again, if that is to left translate and roll over and fail, then look out below. But as a minimum, I would expect us to break down from the trend line at the top. I would then expect us to find support short term on the second angle, break down from the second angle, and I would be looking to think about covering at least a significant chunk of any shorts on that third angle out of that weekly cycle low. If that weekly cycle low is to fail, like you're suggesting here, maybe there, and then roll over again.
Yeah, it would be like another left translated cycle since you're going in a downtrend.
Yes.
As per your PDF.
Yep, that's right. And then
another
fail.
breakdown.
Yep, that's right. Into there. And that B would be a nice place to look for another short-term near vertical trend line breakdown. And I would be using that to guide me down to that next weekly cycle low.
There we go. That would just be the A wave. And then you'd come up here somewhere before heading lower. And then if you zoom out, that gives you a nice little botched head and shoulders reversal for something massively lower.
Yep.
This all makes sense. I mean, it ties together really nicely if all the trades play out
Yeah, and
as anticipated.
if nothing else, it tells you where the high probability bounces are in terms of time, and I think that's very, very useful. Like, for example, if you're short and we're close to a weekly cycle low, then it's probably a good place to start to cover the short, because out of that weekly cycle low, there is usually going to be at least a couple of good weeks of bounce. Even in a really bad, horrific bear market and a crash, you'd probably expect the weekly cycle low, once it confirms a swing, to give you a couple of weeks of relief.
Yeah. Nothing goes in a straight line. It goes slower and faster than you expect.
Yeah.
Okay, so something with this cycle thing, I'm gonna have to go back to the Bitcoin chart to ask something about this, and this might be for like your private group membership, but I think I was showing you on the 4-hour chart the cycles of that, which I'm just lining up the lows. Do I have them on here? I do not. That's good. Cyclic lines. Let's go with this low. This low. Come on, derivative. All right. So if you're in a downtrend, you're getting left translated cycles, left translated, all the way down. This one technically could be left translated.
Yep.
This is still left translated, but it's in an uptrend. So similar to, I'm sure you've seen my video of the higher highs, higher lows, just keeping it super simple.
Yeah.
Is this something where if you get a right translated cycle, you would expect the next cycle to be bullish, and that becomes your buy setup? Like, it changes the cycle structure if you peak out, around the 26th of May, and then come into this 4-hour cycle low or 1-hour cycle low. I don't even know. You know what I mean?
Yeah. Well,
so
yeah. A bullish cycle is, I mean, by definition, if you think about bullish conditions, we're spending more time going up than we are coming down. So we would obviously want the cycles to right translate, because that's how you get the majority of the time spent going up and lesser time coming down. And then the inverse is true for when we're bearish. When we're bearish, we spend a little bit of time going up, left translate, and spend the remainder of the cycle in a decline. So if we can make a right translation here, then that's a very encouraging sign. It's also very encouraging if we can make a higher low and not fail the current cycle, right? So even if this left translates and kind of just chops around sideways from here, that would be okay, so long as the next cycle low is, a higher low, a significant higher low, and out of there we can come and form more right translated uptrends. But it doesn't, just because this is left translated, it's kind of too early to tell at this point from a cycle point of view. We really need to see the next cycle low. But if we are going to form an uptrend, we should be expecting these to right translate.
Yeah, but this previous low time frame cycle, it left translated.
Yeah.
And this one currently is left translating. I wonder if that would speak to a corrective, like an Elliott wave correction, just going ABC, and we're still bearish, if you will.
Yeah, it's possible.
Time will tell that.
Yeah, we need to see more price for me to be able to have any degree of confidence where this goes. I think we need to see more price. I noticed the Elliott wave is saying that as well.
Line. Yeah, and they will.
Yeah.
let's get into the Elliott wave. What we're going to do this.
Sure.
Especially on Bitcoin, because Bitcoin used to trade so beautifully with Elliott wave theory, all through 2021. 5 waves up, 3 waves back, 5 waves up, 3 waves back, 5 waves up, 3 waves back. It was all, it worked so perfectly until, I want to say this area on the chart here. Right there is where I think things have changed. The market since then has been trading more like a Forex, like a foreign exchange. I don't know if you feel the same way or if you've even traded Forex before.
I don't trade much Forex, hardly ever in my career, to be honest.
But it's a different market. It's a different beast, right?
Yeah.
The trade that's choppy, it rarely trends, and a lot of just liquidity, back and forth liquidity.
Yep, that's exactly why I stay away from it, because it is its own beast.
Same here, I can't stand it.
Oh, you don't like it either? Yeah, no, I'm not surprised. Yeah, there's too
I
many
don't know.
things going on.
I'll trade the setups, but so if we go into this section that I marked, July of 2021, this had a lot of Elliott wave people up in arms in this section, this price section, because Elliott waivers saw not an A, B, C, D, E. You have to say this is 3 waves up because it came back down and broke below the B wave. That solidifies that into 3 waves. Came back down, you'd expect, a 3, 3, 5. This is your sell setup right there. So a lot of Elliott wave people were like, well, we still need one more leg down because this started off with three waves. You can't have an impulse start off with 3 waves. Well, there you have it, folks. It did it. And it keeps doing it. And since then, I've noticed that Bitcoin bottoms tend to be 3 waves off the low instead of 5 waves. And it trades way differently ever since then. Especially like in this bear market, it gave you buy setup after buy setup. I mean, I got stopped out 1, 2, 3, 4, 5, 6 times or something like that. I mean, I made money on it still because I take profits as soon as it bounces. I take off 25%. So I cover my fees, but pain in the butt to trade that.
Yep.
I anticipated 25K being the low just to sweep that liquidity. There you go, ABC, and it looks funky. Let's go. But the cycles weren't in yet, which is, I think, why cycle trading added into your Elliott wave counting and whatever else you're trading is so beneficial. I really like it. Same thing off of here, three wave off the low. That's a 3 wave, 5 wave down, explode higher. I mean, Elliott wave it doesn't work like it used to. And this is what I tell people. It's trading like Forex. Go ahead.
You've brought an interesting thought to my mind just saying that, actually, that I was having for the first time ever, really, over the past year. I've been noticing that Bitcoin has been really tough to trade from cycles. The counts have been quite wonky more often than I would expect. And, if you flip a coin 10 times, you probably get half heads and half tails, right? But if you flip a coin 1,000,000 times, then there's going to be runs of 10 or 20 or more heads in a row. And so I was asking myself, is that what we've seen? Have we just been through a rough patch where the cycle counts have been out? But the cycle count for Bitcoins, inarguably, I think there's a 69 or 70 day count in there somewhere. There's a couple of 40s, a couple of 40, 42 days. And that is not something I would expect from any other asset class. That's certainly not something I've been used to seeing. I mean, yeah, from time to time, they throw the odd one out. From time to time, one shows up early, one shows up late. They tend to average. But Bitcoin has been a real problem child in terms of getting the cycle counts correct. This cycle specifically, it was okay from the area you highlighted, from that kind of, 30K region before we went on to make that final high at 69K. It was all okay in there. The count was fine. The count was fine on the way up. The count was more or less fine on the way down. And then, like I say, by the time we got that bear market low, the count has been tough. It's been one of the tougher things to count through my entire career. And it's way, way, way less inconsistent this time around than it ever has been before. It's way less inconsistent. Wait, am I saying that right? Way more inconsistent. Yeah, way less consistent. Way less consistent. Way more inconsistent than it's ever been before. The S&P 500 hasn't given me this trouble. Gold hasn't given me this trouble. Oil hasn't. The Dixie hasn't. Nothing has apart from Bitcoin, and it's been a real problem child. And you saying that you've noticed it started to trade perhaps more like a Forex actually is kind of making me wonder if that is why the cycles have been so tough to find inside of the windows. They've been easy to identify in terms of swings, but quite a few of them have shown up as timing-based cycle lows. Quite a few of them have shown up early, and there's this whole fake out fail cycle
and go the way you expect it.
Yeah, well, yeah, it's just been a real problem child.
This one. So this is what Camel has said. I think you were saying this down here. We're about to experience the most hated, most misunderstood rally, and that comes to mind.
Yeah,
because this has been just a pain in the butt. Even though it's an uptrend, it's like, okay, where do I get in? Oh, not there. Okay, well, now where do I get? Oh, not there.
Yeah.
So yeah, from any method, I think has been invalidated several times during this uptrend. I've noticed cycles Watching you do the cycles, you got stopped out on a few here.
Yeah, way more than I
Got
normally
back
would have.
in, but
Yeah, way more.
and Wyckoff method didn't work as well, I
Nope.
would say either.
Yep.
You have the grab of liquidity back up inside the box, and then it comes down and it stops you out.
Mm-hmm.
Elliot wave theory gives you 5 waves up. Guess what? It's breaking that low. It keeps stopping you out. And I want to point out, like, what has changed at the end of 2021? Do you know?
Fed tightening? That was a bit later, wasn't
What
it?
is
That was later. That was at the top.
no,
But nothing. I
no,
don't know.
no. Fundamentally, what changed in this range? I don't know the exact date, but I know what changed.
Institutions?
It was around that time that BlackRock announced that they were planning to get into Bitcoin in the coming year.
Yeah.
So how do they get into Bitcoin? Do they just start buying at market? Heck no. They want to fill their bids at this liquidity down here. They bought. And so many people were trying to look at things from a Wyckoff perspective. And I got my start on Wyckoff method. That's the first thing that I learned, is how markets have campaigns and they accumulate, mark up, and then distribute, and then mark down.
Yep.
It's just part of the market cycle. So let me draw a box. I usually draw these with boxes now, but this is a 6-month accumulation range, and broke the low, came back up, tested, and broke back inside the box, tested. That's not even testing the lower side. That's as far as it could push down. So that's a sign of strength right there. But during this area of 25,000 to 30,000, so many people were saying, well, BlackRock they need to buy. So they need to push price down to let the big boys in. I'm like, you don't understand. They've been buying this whole way down.
Yeah. Yeah.
They were buying all this 6 months of just anything that you were willing to sell. They wanted to buy it.
Yeah.
They can buy it at all-time highs. They don't care. They'll buy it here. They'll buy it here. They'll buy it here. They'll continue buying it. They have unlimited resources. They have a printer of free money. They're buddies with, the central banks. They've got connections. If they need money, they can get their hands on some capital. So if they wanted to just let the printer go burr and mark this thing up and just print, buy gold, buy silver, and Bitcoin, they can really do it.
Yeah.
They don't need to let any big boys in. They want the big boys to buy much higher so that they can offload their position, because they're the biggest of the big boys. I don't think they'd have a problem, running their friends under the bus for profit. I see them as those type of people.
Yeah, I agree. Yeah.
That's my view. Is that's when the market changed. We're now dealing with that Aladdin.
Yeah.
What is that called? It trades way different, and it invalidates every buy setup and it validates every sell setup. It's really good at doing that. So that's why if you're new to trading, I really suggest stepping back and looking at daily closes. Daily closes are one of the most important, and weekly closes. They tell you what they're doing by the closes. So if they push price up here, that tells the algorithms and the robots to look for a higher low somewhere around 64. And why would you look at 64? We could look at the weekly chart for that. There's a beautiful candle there, engulfing candle. So you have basically an order block right here. I'd mark this area off on my chart, 63,996. I'm interested in there. Stop loss would go below the block at 61.3. So you got what, a $2,500 stop loss. So manage risk appropriately. That's some alpha there. Trade setup for anybody that's interested in it. That's where I'm interested, is that order block right there, similar to way down here. What was it, September of 2023? You had this engulfing candle right there. It tagged it perfectly. Horizontal ray. And I nailed that one when I came down. I waited for it 1, 2, 3 weeks. And I was like, that's my buy setup. I'm not buying until there. And boom, filled all my bids. Off she went. And I was like, wow, that surprised me. That's one of those, I was surprised at how good that trade setup played. Of course, I took some profits up here. And then on that buyback, I was like, okay, this is probably going up some more. So I bought back in, went up here, flushed down. Then I took some profits here at a lower high on a daily, I think it was, and then just watched it play out. Of course, we had the ETF and then the flush. And there's your Wyckoff reaccumulation. You draw a box around it, keep things very simple. Swing failure pattern at the low, stop everybody out, back up inside the box, stop loss goes at the low, and off to the races again. And then we have to figure out when this correction is going to complete. For now, it does resemble this leg from April through June of 2023. Here we are 1 year later, kind of doing the same thing. We'll see.
Yep, we will soon enough.
Stupid BlackRock.
Yeah, they're not making my life easy, at least from a cycle perspective.
And from the comments as well. I don't know if you're getting as many comments as some of the other influencers on Twitter.
Yep.
Like, oh my gosh, Credible Crypto is just getting it so bad.
Yeah, he really
just
is.
Like he's trying to help you guys.
Yeah.
And he deals with it like half of his time is spent defending his idea, and this is trading, ladies and gentlemen. Oh my gosh.
Yeah,
got a lot of new retail.
Yeah, it's been rough. I was just about to say, I think recently a lot of new people showed up. I could just tell that by the comments, and I mean, Cred's got orders of magnitude a bigger following than I do, and so I can only imagine what he's going through, to be honest. Mine was relatively muted because my following is relatively muted, but yeah, I think a lot of retail did show up. Nothing that indicates that was like the top. I don't think it was that level, but certainly I think some new eyes came to the space, and I could definitely see that. And they weren't happy. They weren't happy with the pullback. They weren't happy with things not having any degree of certainty, and there was a lot of anger and toxicity for a while. I will say this, at least in my comment section, I think Cred's still getting it every which way, but at least from my comment section today, it's been wholly positive today, both Twitter and YouTube. So it was nice to breathe a sigh of relief. When I got to my comment section this morning, I was kind of tense. I was like, oh, here we go. Here we go again. But no, as of today, it was much more chill. So that was nice. And hopefully that's a sign of, moving on, moving upwards, I hope. But yeah, we're going to find out.
We might have to chart that. And, say when things get toxic, take profits.
Yeah.
I have a chart that I wanted to show NASCO, which great work he does as well. Give him a follow on Twitter.
Yep.
NASCO's got some great charts, but he was looking at a few charts, but I wanted to share an Ethereum chart with him. Weekly on Ethereum, and I'll just build this chart. I think it is going higher, just based upon a fractal pattern that I was seeing. We'll just measure this top wave and project down. Came right to the 1618, right there, and current correction in 2022, if you measured that leg down, and you measure that up, came to the 1.618. Structures kind of look similar. If I had to guess, so my target is derived from a fib retracement from the all-time high to that 1.618 low. You can see the following cycle went up to the 1414, and if it does repeat and you have a fib retracement from previous all-time high to the current low, that gives me a fib retracement of 9,481, just shy of 10 grand. So that's my current target, and that might be coming, on a blow off top. I think if you break all-time highs, people are going to be like, price discovery Ethereum, and it's like, no, it's actually a security. And
don't say that. They really will come for you, Kamazabi.
Kind of what I'm looking for. I wanted to try to get. How did I do this before? From the low, I think it was. From low to low. I'm just paying attention to the start and end of these lines. You have the bottom. Crap, let me extend this up a little for you so you can see. Okay. Right there. All right, start of the correction, and then you can just watch the cycle progress into the highs and the lows, highs, and there's a low there that kind of lines up with our final low here. And now came up to a peak that has a similar peak,
That
and
is
then a correction
crazy.
down. And now I'm seeing that the cycle is kind of repeating. So if it does, it gives us a cycle peak at, where is this? That's November 11th. That's a little late for my liking, but maybe sometime around there. Might peak out a little later than everything else, maybe, or it does just continue. And maybe you do have a, the same thing that goes down and then back up again. And that would put potentially a 2017 scenario where it keeps going until May of next year, potentially. Yeah, that's just kind of what I was looking at on Ethereum. Hopefully that's helpful to NASCO and his charting process, but just looking at how the cycles all line up with the lows and how the timing is just kind of working out again. It's something to be aware of.
Really interesting how it aligns.
I know, right?
Crazy. It's absolutely crazy.
He had Nvidia as well. He showed a chart yesterday.
Whilst you're loading Nvidia up, do you think the ETH ETF gets approved?
Yeah, probably. Why not? And BlackRock's going after it, so
why not?
It's part of the cycle. I mean, it's all garbage anyway.
Yeah.
Let's touch on that a second. I mean, Ethereum came after Bitcoin. Bitcoin is the innovation. Ethereum is a copycat with extra bells and whistles on it. And then from then on, you've just had, I mean, we got 20,000 of these shitcoins.
Yep.
And it's all a distraction from the innovation that is Bitcoin.
Yep.
And if what we're expecting, difficult times coming in the next few years, there's no room for these 20,000 shitcoins.
Nope.
And maybe even Ethereum. I mean, Ethereum.
Careful, Kemazabi. They'll come for you. They'll come for you in the comments.
I'm a toxic Bitcoin maximalist.
No. So am I. So am I. I'm only kidding. Please continue.
I'm just like, come at me.
Yeah.
Come at me, bro. but some dude was talking about that on Twitter today, that the ETF is going to destroy Ethereum. I'm like, good riddance.
Yeah.
I mean, we all need to be on the same team, and it's Team Bitcoin. Everything else is just bells and whistles, a distraction. And if we can all rally behind Bitcoin, I think that's the best, highest market cap. It's your best shot for truly decentralized money, a new financial system that actually works for the people, as long as we can shape it to be that. If we allow it to be financialized and I need my shitcoin to pump for US dollars, then you're stuck in a fiat system. You're fiat minded and you're going to be stuck there. That's where you're projecting.
Yep.
So I don't know how you expect to change your situation when you keep chasing after the same thing you've been chasing after your whole life.
Yep.
If you want your situation to change the way you're thinking about your purchasing power and not so much your money.
Yep.
To be able to acquire, like, you don't want money. You want the things that money can buy. If you want your shitcoins, you just want your shitcoins to pump so you can have more dollars. And if you're looking to get more Bitcoin out of trading your shitcoins, you're just trying to take advantage of somebody else. The greater fool theory. You really don't know what you've got right in front of you. The opportunity that is Bitcoin, it really is a really good opportunity that people are overlooking. Whether it's priced in or not, don't really care. Price is secondary to what it actually is. I mean, put your greed aside and think logically. Bitcoin is your escape. It can be a great tool. Don't throw it away.
Couldn't have said it better myself. And just to add one quick thing on that, I mean, Ethereum is already captured, right? 70%-ish pre-mine. Some nefarious things around that whole ETHgate situation. Not to mention they switched from proof of work to proof of stake. Or proof of stupidity. And I mean, I don't say this to be toxic. I say this because you can't censor Bitcoin, right? But you can censor Ethereum. And that's just the reality of the situation. They made it more like fiat when they switched to proof of stake because, people closest to the printer, people closest to the pre-mine in this case, people with the most staked supply, they get to make the decisions. They can still fork the chain at will. You can't do that with Bitcoin, right? Or not successfully anyway, not with a consensus behind it, not with people that are willing to switch from the mining pools. And I could do this all day, right? But Kemizabi, you said it so perfectly. You know, think logically, realize what is in front of you, and there's no point chasing Ethereum because you want more fiat when fiat is eroding in front of our eyes. We're very late in all these cycles, and so yeah, I couldn't agree more, brother.
Yeah, and things could potentially be coming, and these companies, I mean, so-called companies, they're not going to survive. You're going to have difficulty sustaining your food supply, I think, coming out of all this, potentially. And
Yeah,
that's how
because
they drain you of your finances, is they just drag it out, markets down, economy down, you're having a hard time paying the rent, and you have to sell your assets in order to survive.
yeah. And so you want pristine money that is deflationary. And I know a lot of people say, yeah, well, ETH gets burnt, so it kind of is deflationary. Like, it's not. What's the issuance schedule? Oh, yeah, you don't know because it hasn't been decided yet. What's the max supply? Oh, what's the max supply, Kemizabi? Oh, yeah, you don't know because it hasn't been decided yet. Okay. So
Don't even know what you're dealing with. There's too many unknowns.
there are.
Honestly,
Yeah, there are.
that's risky. That's a risky investment.
Yeah.
Yeah, all these shit coins are. Okay, so the other chart, which might tie into the S&P 500, is the Nvidia chart. It's been a very strong player in the in the stock market, which we've got several that we should probably keep track of, like Apple, Microsoft. They're all kind of ranging upward pretty decently. But I was looking at, trying to figure out a target for what's going on here, and on the monthly chart, this should come back down. Probably take liquidity down here. I mean, it's been very strong. This is a logarithmic chart. Once this pattern is all said and done, though, this thing is what I would be looking for. My target is 20 or 1200 or so, based upon a weekly chart.
Yep.
And after that, measure trend-based fib extension. Let's measure this 2007 leg. You get down to the one-to-one is from 1200-ish. 200 bucks. You're going to hold your stock from 1200 to 200?
I hope not.
Arguably, it would be a buy setup. I mean, that's the type of patterns that we're kind of dealing with, like across the board, though.
Yep.
Zoom in for
Actually,
weekly.
Kemizabi, when you've done this, could you fit the 3 trend lines? I'd be interested to know where that first one projects the target for the downside.
Dude, great idea. All right, so this looks like, wow, this looks like the end of how it started. So I'm just trend. How do I mark this? I guess we'll do it with Elliot wave.
They just beat earnings, by the way.
It beat earnings?
Yeah, according to the trading view thing, it's green. So surprised 10% to the upside. Probably explains the gap.
So imagine this A leg and having an ABC in the middle here. And then I'm matching that leg right there. So
I see where you're going.
All we got left is this little thing right here.
Yep.
And
the third angle.
And the third angle.
Yeah.
Trend-based extension. Let's measure that leg up to there. Project from below there. $1,208 to $1,300 would be my box area that I'd be looking for eventually on log scale. And that should complete it. Let's get some timing going. See if we can trend-based fib time this thing. That to the high, project from the low. Roughly there. What's this at? June 17th top. All right. We're going on the weekly chart angles or monthly? What we were talking about before.
Weekly or even, yeah, so I think weekly would be fine.
I think I'm seeing this way down here.
Yeah. Does that give you a 200? Looks like it might.
That'll give you a $30. The second angle will give us. That'll give us the 200 though. 200, 300, something like that.
Yep.
And that would match that leg that comes down.
Is
brutal bear market?
This third angle might be already in by my eyes.
on the monthly, it's going.
Yeah. That's it.
Yeah,
Yeah. I mean, look at that. Into
that's
your
a
box and then
monthly.
break down, perhaps.
Yeah. Well, that's the thing with these. Like, if you want to sell this thing short, which I have very clear invalidations for it, which is the 1.618 of this leg. So my invalidation is $1,700. If $1,700 comes, that means something else is happening. I would even say anywhere above $1,500, I wouldn't like to sell it short. But yeah, if that leg is going to match that leg, it invalidates for certain at the 1.618. It does not look probable hitting the 1,429 1.272. That makes the matching leg less probable, but it's still valid. So I mean, you could say potentially it reaches the box, rejects from there, and then we'll see what it gives. It's like, well, yeah, there's a trade setup to be had there, though. You can sell that thing short, and stop loss goes at 1,700, and I would target $200.
Yep.
I mean, you got all this liquidity down here. That is likely to be taken. I think there's a gap down here as well on the daily chart. Check if that is true. Yeah, look at that gap down there.
Oh yeah.
Huge gap. $300 to there. And might as well take this liquidity while you're there. $250 all the way down to, all that.
Yep.
Take all those stops. Might as well. So I like that target. I like that trade setup. Unfortunately, that's going to hurt a lot of companies and probably hurt a lot of investors.
Yep.
Let's just measure the drawdown from the box down to the gap. 70% down. I mean, that's kind of what we're looking for.
Yeah. Yeah. Yeah.
It's a new paradigm, bro. They got AI.
Oh dear. Oh dear.
We're getting all the retail in the market, and this is the way it cyclically works. Like every cycle, you get more and more retail participants towards the end of the cycle because they're not confident at the beginning of the cycle.
Yep.
They have zero confidence. They're like, no, it's going way lower. But then, like you always show in your videos, just about every day, it's like at the peak of markets, this is when retail goes crazy and they want in on everything. Everybody's making bank.
Yep.
And nobody's securing profits.
Yeah, yeah. They haven't learned where the sell button is yet. They only know how to buy.
Yeah. Sell button disabled.
Yeah, exactly.
Oh, that'd be messed up. But like 1929, back before the Great Depression, very similar things happened. You had the Roaring Twenties. You had people that would sit around the stock ticker machine all day, just looking at their stocks go up in value if they did, and they would put off work sometimes and just, I'm just going to see if my stuff went up in value. I don't even have to go to work today.
Yeah.
I'm making bank, bro. And people are just, that's not how you stay consistent. You still gotta do something. I mean, even if you're working the charts, that's a job.
Yep. Yep.
It's really nice. So towards the end of 1929, actually towards the beginning of 1929, going up into the peak in the S&P 500. Let me get my reset stuff going. Let's look at the SPX on like a 3-month chart. Three weeks. Let's go monthly. 1929. So into 1927, into 29 was your blow off top. Towards the beginning of 1929, you had the economy that was actually doing pretty poorly. You had an economic slowdown, but the markets continued to rally higher into, I mean, we have it right here in front of us, folks, the 1st of August. And it's eerily similar to one of our projected timelines nowadays, 2024, that, hey, 1st of August, don't tell me it can't peak out the 1st of August because it's done it massively. But yeah, similar things are happening. You have max retail. We have the ability to trade on Robinhood. You can trade crypto with your phone. This is ridiculous. You have someone like me that was a carpenter that is now looking at markets and advising people around me that on what stocks to buy and when to take profits. I mean, I've learned how this stuff works, and I'm basically the shoe shine boy. And here you are listening to what I'm saying. This is how markets top. I even tell that to people, like, and I'm a guy that was, renovating your bathroom, and here I am telling you, this is what markets are going to do. Believe me, we're close to a very significant top.
Yep.
And you got a microbiologist.
Yeah, I was a
Trading
chemist.
trend
Yeah,
lines.
chemist. Yeah.
A chemist, yeah.
Yeah, yeah.
Yeah, this is how cycles peak. Macro cycles, very, very large cycles. A lot of people can't see it.
Yep. No, you make some excellent points. Excellent points. And the charts are they're kind of getting more and more ominous, right?
Yeah.
Something needs to
Which
change
is
very
why I like
quickly.
business camel coming out in full force. I was like, that was the best. Those two videos were the best videos of the year. I
Oh,
think they're
thank
the
you.
best videos I've ever seen. It's just like, wake up, people. Sure, you want your shitcoins to pump, but look at where you're at.
Yeah.
Don't get trapped. Stay focused. This is not a game.
Yeah.
Because it's not. I mean, people are going to be hurt. I mean, you said it so well in the first video that you published on YouTube. I would recommend people go check it out. You put together your basically a business plan for your YouTube channel, and I was like, wow, you foresaw this 2 years ago. Into I just need to help people. I need people to see things, and you've grown your channel over time, being consistent.
Yep.
And here we are, 2 years later. It's like, okay, stay focused.
Yeah.
This is what we do every day. Check the markets, stay focused. This is a job. Don't lose sight of where we're at.
Yeah. Yeah. And it's tough. It's tough because when you buy stuff and it goes up, it feels good, right? Especially if you're not used to it. So,
Yeah, I was telling somebody that because I had a trade setup play out, and it was a lower time frame trade setup. I'm like, boom, just pop $2,000, sweet. And they're like, well done. You must be pretty happy about that. I'm like, it's just another day at the office, really.
Yeah.
I mean,
Yeah. It's the
I
difference
could just
between
easily lose $500 tomorrow.
yeah, it's the difference between. I mean, when you actually know what you're doing, it is just another day at the office, right? And it's just you shouldn't be celebrating the wins because they are expected. They're expected as part of the process and part of the system, just like losses are expected as part of the process and part of the system. So there's no need to be celebrating wins any more than there is any need to be crying over losses, right? It's just there's a number of expected wins and there's a number of expected losses, and the name of the game is to keep the losses small and the wins bigger than the losses, and
Yeah.
that's how you stay in it, right? Long-term mindset, slowly over time, but also you have to keep in mind it is a business, right? This is a business, and if you don't treat it that way, then you're certainly not going to get business type results.
Yeah, so that's like people on Twitter posting profit and losses, their P&Ls. It's
Yep.
like, that's not my cup of tea. For one, I'm in a few trading groups, and I am totally against posting that for two reasons. One of them, then people get jealous.
Yep.
And they want what you have, and then they get just mean towards you. Like, it's not great, and it's bad for other traders' psychology.
Yep.
To be thinking that way, whereas you have to focus on you, and that's another distraction. That's my mentor that taught me that. He's like, why do I care what you did? Are you making your percentages? Be happy with your percentages, make your day, and then close your books.
Yep.
I don't need to know what you're doing. I don't care.
Yep.
And if somebody else took the opposite position that you had, and they actually lost money because they didn't use a stop loss,
Yep.
they're going to be pretty upset.
Yep.
So yeah, save
And,
your P&Ls for yourself.
Yeah, I agree completely. And it's also a number of people have been caught over the years using sim accounts, haven't they? Demo accounts and posting big screenshots.
They trade both directions.
Yeah, trade both directions, blow up a couple of accounts, and then they post the screenshot of the one that worked out. And the other thing is as well, yeah, it's nice to make a big chunk of money, and I can understand that if you work and you earn a salary, and then eventually after trading some time, you realize like, wow, I used to take me a year and a half to earn that, or whatever the number is, right? It's nice to look back at that and say, well, yeah, I've come a long way. But the reality with these screenshots is if you're not consistent over time, they mean nothing, right? You post a big number to say, oh, look how much money I made, right? Great. But did you just lose like 10 trades of equal size before you posted that screenshot? Because if so, it doesn't mean anything. It literally means nothing, right? It literally means nothing. So yeah, I completely agree with you. I'm not a screenshot guy. I think privacy is good, and like you said, it's all relative, right? If I started with $1,000 account, then I build that thing up over time, and I can increase my quality of life. That's fantastic. But if I started with 10 million of my dad's inheritance money, and then suddenly I can make seemingly high numbers, it really doesn't mean anything, right? It's all relative. It's all relative to what you got, and you're against yourself in this game. You're against yourself.
Yeah, so much so. That's like being of a trader mindset. Like I'm glad that I learned to do this years ago because right now, very difficult time to step into the markets and try to learn. I think you're under the gun
Oh yeah.
because
Yep.
things are going to reverse on you, and you're going to learn a lesson very quickly. But having learned this years ago, it's like I know how to protect myself. I know where I'm invalidated, and I'm disciplined in that respect. Where somebody else that's new to the market is like, no, I have conviction in this meme stock. It's totally going to go up, and I'm going to buy it. It's like you have no idea what you're doing. You have no invalidation. What are you doing? Are you trading both directions?
Yeah.
Where you open a long and you think you're hedging your position
Yeah.
by opening a position of equal size in the opposite direction? You're not a hedge fund. A hedge fund uses a similar strategy, but they're not trading the same exact asset to hedge
No.
their position.
Yeah.
They're countering it with some other options, and they're paying a small fee.
Yeah.
You're not a hedge fund. You're a retail trader. Take the small loss so you can have the big gains. Come on, people.
Yep. Yep. 100%.
Speaking of the memes, I did want to get into this GameStop very briefly. While I
Yeah.
do
Sure.
think it's a distraction,
Oh, I'm glad you said it because that's exactly what I think as well.
oh, it's just so pump and dumpy.
Yep.
But I do see something really ominous here that could lead to an excuse as to why everything collapses. They might decide to blame it on them, on these game stoppers.
Mm-hmm.
So what if this is a B wave? I mean, Elliott wave terms, you have a sharp decline here. There's your A, there's your B. We're now working on the C leg that'll come take out the late people that think, oh, that is the bottom. Nope, you're going to get stopped out.
Yep.
But after that, what if this leg comes, and you have a similar thing to this that just goes up? And this is what really blows up a lot of hedge funds that are short. I mean, that would be a monstrous thing. I mean, you're talking $800 GameStop. I'm not saying it's going to $800. I would not throw money into this. It's all a liquidity grab. They're just taking your money. But if I was to structure a trade based upon the chart that I'm seeing, I would allocate a very small amount if it comes down here, takes the low, pops back up.
Yep.
Then I know my stop loss is there.
Yep.
Because if you break below that, you're going for the rest of the liquidity. You're probably going to zero.
Yep.
So I don't have anywhere that I like to manage risk off of this particular chart.
No, me
You
either.
could manage it from that low, yeah, but I think you're gonna get stopped on that.
Yep.
Just for liquidity.
Yep.
But if this decides to mimic that leg and just go, we were right, GameStop all the way, and there are people that blow up the system, not that you're necessarily going to be able to take profits up there, because I mean everything's in disorder at that point.
Mm-hmm.
I mean, Robinhood is going to be totally annihilated.
Yeah.
They'll probably shut down all their stuff. They're not going to pay you out.
No.
Especially if that goes, I mean, 10x from 20x from here. Yeah, that's not happening. There's billions of dollars at stake. They're not paying anybody billions of dollars. They're just going to go out of business.
Yeah.
And that would lead to the David Webb great taking thesis, where he wrote his book, which I recommend everybody look into that. It's very ominous stuff where you don't own any of these shares, especially if you're dealing with Robinhood. They own the shares. You have a claim on those shares. Nothing guarantees that you get paid out. You can take your money and use that as their liquidity for their bankruptcy to pay out their shareholders. I think Robinhood's a scam.
Yeah, I do too. Yeah. Yeah, and I think you're right.
Yeah,
This is completely a distraction. I've seen some people speculate that it's not even the, what's he called, Roaring Kitty, not even behind his account. They think it's probably not even him behind the account.
He sold his account. You got to think he's got legal fees that he's got to pay
Yep.
from getting sued by the United States, I'm sure. And yeah, if somebody pays him $500,000 to take over his Twitter account,
Sure.
heck yeah.
Yeah.
Somebody will make billions off of that, just
Yep.
pumping and dumping.
Yep. Exactly.
Stay away from it. I don't like it. This is going to take your money.
Yeah.
I like something smooth and consistent.
It's probably going to harm. It's probably going to harm future generations of retail in their ability to trade. And yeah, I think this is probably going to bring in. They're going to use this as an excuse to bring in regulation, I think.
Yeah. Well, to kick out retail. This is
exactly.
You're not allowed to trade the market any longer because you guys screwed up our markets.
Yep.
And that's detrimental for the global financial system. So if we take it back to our S&P 500 chart, oh, we got to go big dog, 1 month chart, back to 1929. This stock market crash had everybody so soured from investing in the markets. If they had any money, they did not trust the stock market until probably 1981. That leaves an entire generation that did not participate in this rally.
Yeah.
Because they were afraid to, and people would rather bury their cash in the backyard. Well, they
Yep.
lost out because your cash has been devalued since then. Most amount of participants are going the wrong direction. So similar to that potential, having that same 1929 type of flush down, I don't think the next leg up, I don't think we're going to be allowed to participate as well, based on some regulation where you have accredited investors only, and you need to prove a liquid capital amount of 2 million plus before they'll even allow you to trade in markets, because then you're responsible and you're an accredited investor.
Yeah.
And this could go for gold, silver, Bitcoin, all that. Easy to implement once we get into the central bank digital currency system. Not to get you started off on that, because I'm looking forward to what you have to say with Cobra this weekend.
Yeah, we'll do CBDCs in the next episode maybe, and yeah, we're probably going to, undoubtedly me and Cobra will talk about that on Sunday with CPM. But yeah,
that's a rabbit hole.
Yeah,
in itself.
for sure.
But yeah, I do see them shutting down markets for retail, because the bounce I see is going to be substantial out of the next cycle lows, because they're going to be money printing. I mean,
Yeah.
I see inflation coming over the next decade. The metals will show you this on the chart. Gold, silver, palladium, they all say that these commodities are going much higher, and likely Bitcoin as well. And they don't want you to participate in it. They either want you too afraid to invest, or they're going to block you because you're not an accredited investor.
Yeah.
So this could be the last little window of opportunity to make a little bit of life-changing money if we do get this cycle blow off that we're potentially having in the next few months, and make sure you cash in some chips and do something to take care of yourself for the next year or two while things could potentially get hard. Just cover your bases, protect yourself.
Yep, absolutely. Absolutely. Kem, do you want to wrap it up here?
I mean, we'll keep in communication on Twitter. I'll keep responding to some of your tweets, and I post some charts and stuff. I'll try to make my own videos.
Okay.
Complete writing my book and stuff like that. I mean, we're so busy. I mean, what the heck?
Yeah, sure.
You've been busy. I've been pretty busy. But
Yeah.
yeah, no need to push it. I mean, we don't need to do this every week. Just once a month,
No.
I think is.
A week's maybe ambitious, but I guess let's keep an eye and see if we can set a third angle, right? If we start
Yeah.
to set a third angle, then we can. We'll aim for a month. A month is cool, but the last month certainly went really fast. But yeah, if we
plan for a month, but if we see something crazy in the charts, me and you are going to jump back in here and be like, "Here it comes."
Okay, yeah, I like the sound of that. So, Kem, if you want to use this opportunity to shout anyone out or make any plugs, please do so.
Just Jim of All Trades. I'm there Sunday night doing live chart analysis. He does Elliot wave trading, and I do Elliot wave trading as well. I think he's a little better at Elliot wave than I am. He reads the RSI a lot better. But yeah, Jim of All Trades on YouTube at 9 o'clock Eastern Standard Time, live on YouTube. I'm in the comments section, just kind of moderating. Check him out. That's basically where I am. If not, read the stuff that I wrote on Twitter to kind of get mentally prepared for potential things that are coming. That's it for me. I think we're good.
Happy days. Well, thank you ever so much for your time. Thank you for coming on. I really appreciate it. It was great to catch up with you. And here's to a wild year, I guess.
Great insights. And I've learned a lot just talking about these cycles. I appreciate you taking the time out to.
Oh, no problem. No problem at all. Yeah, thank you for sharing
Awesome
everything.
stuff.
Yeah, I really appreciate it. So, yeah, undoubtedly I'll speak to you soon anyway.